Time now for some business news. I'm joined on set by Stephen Carroll. Good morning to you, Stephen.
Hello, Thomas.
It's been a rough few days on the markets. The amount of money that's been lost since that Brexit vote on Thursday keeps climbing.
That's right. The $3 trillion now is the total of what has been wiped off global shares in the 2 days of trading following the vote. Market watchers say Friday's losses were mostly down to the fact that investors had bet on a vote to remain in the EU, while the falls continued on Monday as they assessed the longer-term fallout from the decision. While European markets have seen some of the biggest plunges, almost $1 trillion was wiped off the value of the S&P 500 index on Wall Street.
That news coming as two ratings agencies downgraded the UK on Monday.
Standard & Poor's became the last of the three main agencies to strip the UK of its AAA status. S&P said the referendum results was a seminal moment that would herald a long and painful period of uncertainty. It cut its rating by 2 notches to AA, while Fitch downgraded Britain by 1 notch to the same level. The move has yet to impact on the UK's borrowing costs, which have actually fallen since Friday, as investors still consider government bonds a safe investment.
Well, we tend to think that this is a result that's affected just the UK and Europe, but actually the effects are as far-reaching as South Korea.
The government there has cut its growth forecast for Asia's 4th largest economy and is planning an extra budget because of the uncertainty created by the vote result. It's to include a $17 billion stimulus package to help boost growth. A statement from the presidency said the move is in response to potential contraction in growth and employment due to Brexit.
OK, Stephen, how are the markets trading this hour?
Well, the Kospi in Seoul actually saw some gains after the announcement of that stimulus package by the South Korean government. Elsewhere in Asia, we've seen small gains on the Nikkei in Tokyo and on the Shanghai Composite. Just Hong Kong trading down in Asia. That's after markets reacting to comments from China's Premier Li that Beijing wouldn't allow drastic changes in capital markets after the Brexit vote. Here in Europe, shares finally starting to see some recovery as well after big drops in recent days. London's FTSE 100 up 1.6% at the open. Paris's CAC 40 up over 2%. Mining shares and banks seeing the biggest bounce after being pummeled in recent days. RBS is up 2.5% in London. That's after falling almost 30% in the past 2 days. Its shares going back to a level not seen since the financial crisis. So we're seeing gains on European shares today. On the currency markets, also finally a little bit of recovery in the value of the pound. We're seeing it up about 0.5% against the dollar. £1 worth just under $1.33. That's after the pound hit a fresh 31-year low of 1.31 in trading on Tuesday. We're also seeing some gains against the euro as well. Market analysts, though, telling us that we should expect further falls in sterling in the weeks and months to come.
Thank you very much, Stephen, for that look at the business news.